Hello, investors and traders. This stock market reminds me of a tale of two tapes. A few select companies driving the whole market while others underperform. For example, NVIDIA, ARM, artificial intelligence companies, semiconductors, technology, the Magnificent Seven, cryptocurrency, and the wildest of the wildest. GameStop are performing well. Meanwhile, 70% of the S&P 500 companies are in a declining phase. Even though we are reaching highs in the stock market, we do not see performance outside of a few select industries and companies. Last year was all about the Magnificent Seven and being inside the Magnificent Seven. We correctly predicted this. This year, it's about the same, but we're sprinkling in a few other companies also. When we say a tale of two tapes, there are a few stocks going up and a lot of stocks going down and not being able to make money unless you are in the indexes. Thus saying that this is what called a distribution phase, which is a topping pattern in a bull market. However, we are not advising you to short this market because the distribution phase, we can still make money on selective companies that are moving upwards. What are the signals of the end of a distribution phase and the beginning of a declining phase where you need to take all your profits and then short the market? The simplest way to put it is we are looking for capitulation. We are also looking for huge up days in small cap companies and those crazy social media companies that go upwards, like GameStop, like AMC, like RIM. When those finish their move to the upside, capitulation happens, small caps are happening. This would be the end of what we call this bull market. This bull market will come back. Do not worry about that. But it will be a time when we take all our profits from the last year and a half and start shorting into this market. Additionally, we look at the commodities market to see if it's breaking out, which could indicate a changing of the guard. This exact situation mimics what happened in 2022. I am going back in history and seeing exactly what was the last stages of a bull market into a bear market. And it's lining up the same way. Just reiterating, this is not the right time to short the market or to dump all your stocks. This is a time to be highly selective. If we do not get proper capitulation, the usual pullbacks are 5 to 10% in the markets, and that will be the opportune time to buy in. This issue of inside of the stock market is called the tale of two tapes. Before we get started, disclaimer: the information provided on our channels for education and informational purposes only and is not intended to be a substitute for professional financial advice. You need to protect your capital by all means. I am not your financial advisor. I am not even trying to sell you anything. These are only my opinions. My system is based on a top-down approach. 60% of my time is to figure out what is going on with the overall market, the big picture. My trading edge is that I have over 100 indicators that tell me how to predict the overall market sectors and individuals. I look for high probability investing, waiting for my 100 indicators to line up and say I have an 80, 90, 95% chance of winning. I use a rule-based system where I am empirical, theoretically, and psychologically have rules that I follow. But most importantly, I am consistent. I do not change from day to day. I do not change from year to year. This same system I've been using for over 15 years. Remember, as usual, one indicator does not make a strategy and should be coupled with other indicators and philosophies. I use what's called a weight of evidence. You will see some indicators work well during bear markets. Some indicators work well during bull markets. Some indicators work well for 6 months and don't work well for another year. But if you combine them all together, you get what's called a weight of evidence out there. As you know, our overall market, we are still bullish. Short term, we are neutral, and we are waiting for a pullback unless there is capitulation out there. The sectors, of course, mimic the sectors that are doing well now. AI, specifically NVIDIA, cryptocurrency, small cap companies that are breaking out, i.e., like GameStop. Long term, we are still bullish and we have not changed because of the presidential election cycle. When we tell you stage analysis, what we are seeing is 63% of the S&P 500 companies are in a downtrend. It is very difficult to pick the companies that are going up when the majority of companies are going lower. On the NASDAQ, it's about a 50-50 split, but still, that is not of a sign of a growth phase, but more of a sign of a distribution phase of what we see, the topping of this market. Thus saying that on January 18th of 2023, we told you to go long QQQs, NVIDIA, and many other stocks and sectors. Just off the QQQs, holding long term, buying once and holding on, we are up 68%. Every time the dip happens for the last year and a half, we told you what to do, buy on the dips. Thus saying that nothing has really changed, just we're coming close to the end of this bull market. I expect a pullback to happen. I don't expect capitulation to happen until maybe next year, but we are watching it and we will inform you when we fully go bearish and take all the profits we've made for the last year and a half. But if you look back at our videos since 2023 of last year, every month, every week, we've been telling you the same thing. QQQs, NVIDIA, AI, cryptocurrency. This has worked very well. As you can see, every time there's been a pullback, it's just gone upwards. Even when it's broken moving averages, we kept steady and telling you to buy. Now that we are at highs, we are of course going to be waiting for a pullback. On our intermediate and short term, we take some profits off the top, especially for the short term, waiting for a 5 to 10% pullback, which is usually the normal averages to pull back. This will be a very volatile market where there'll be big upswings, but also big downswings. But if you have a system, it's okay. You got this one. If you look at the VIX and the VXN, just the numbers itself, it is bearish. So now again, you're looking at stage analysis, bearish. You're looking at fear index, bearish on the short term. And this continues even further if you look at the contract itself. We would love to buy in when the VIX is at 20 to buy into the market. But at the VIX at 12.55, we are looking to take our profits off the table. We're also looking at our short-term indicator, and we can see we are at level 100. When this level reaches 0, of course, we'll be telling you to buy again. So when we improve a little bit in the stage analysis, when the fear index gets better, when our short-term bearish indicator gets bullish, then we will be buying again. But we are very cautious. And with the tale of two tapes, you know it's difficult to find the winners out there. And the winners out there are expensive. Then we go to the CCI indicator, which again is telling us we're going to have a pullback. If you look at the QQQs, we are at extreme levels. We know we'll go up to extreme levels and maybe touch the 0 level and then come back, which is bullish, or drive down to the minus 200 level and then go back up. But again, this is not the time to be buying. This is the time to be patient. Same thing with our short-term indicator, medium-term indicator, and long indicator. All of them at 100 levels. This is not the time to buy short-term, even intermediate term, even in longer term. We will have a pullback of 5 to 10%, and then you decide if this is true capitulation or this is just another opportunity to buy. If you look at our components, we are very neutral, where we take all the components of the indexes of the Dow Jones Industrial, NASDAQ 100, and the FANG, and come up with a number. Usually the number's at 25 on the QQQs. On the NASDAQ, it's a time to buy. And this number's at 57, a time to be neutral. What is very surprising is the Magnificent Seven is still driving this market. And if Tesla comes back also, you'll have 7 out of the 7 companies in an uptrend of the Magnificent Seven. But if you look at AAII market sentiment ratio, everyone believes what we believe. This market is bullish. We are due for a pullback. If you look at the pull call options, we are at extreme greed, signaling us for a pullback. If you look at the RIDEX ratio, again, bearish. The only thing that is bullish is the stock price strength. So again, we are selectively bullish. We will be waiting for a pullback, but we know this is the 9th inning of a bull market. You know the catchphrase: study it, analyze it, adapt it. Peace.